Hello Bees community, I'm Stephen and I'm a popular investor on the eToro platform. Thanks very much for listening to this video today, and don't forget to like this video and subscribe to my channel. I will be really grateful. So in today's video, I'm going to be talking about what happened in the markets last week, and I'm also going to be describing how my portfolio fared. But before then, I'm just going to say that I'm going to try and keep these videos as short as possible. I realize that you've all got very busy lives, so I will try to keep them a lot more digestible in terms of size. So if we talk about what happened in the markets last week, well, the US indices actually had a second consecutive week of gains, and we are starting to see a good recovery. So the S&P 500 was up about 1.5% and the Nasdaq was up about 2.5%. And our portfolio was up over 5.5%. So we have seen a really good bounce back. I understand that January was a little bit difficult because of what was happening in the stock markets. We had a lot going on. We had high inflation, we had fears of interest rate rises, and this caused a big issue within both the stock market and also crypto, because we went into a kind of a risk off period. But since then we've had a good bounce back, and it just shows the importance of not setting your stop losses too tightly, because you can miss out on the recovery. And also shows the benefits of dollar cost averaging, because if you dollar cost average when the prices were very low over the last couple of weeks, we would have seen a good bounce back. However, I am not getting carried away. I realize that we are still down for the year at about 6%. But we will endeavor to try to recover as quickly as we can, and I am bullish moving into the rest of 2022. It can be difficult, and we do have these periods of high volatility, but over the long run, if you stay patient, we should get very good returns. Since about November, we have been seeing that value stocks have been outperforming growth stocks. But last week, they performed actually quite similar, and we did see that great bounce back in terms of tech stocks. And also we saw that small cap and medium cap stocks actually did better than the larger cap stocks last week. And last week heralded a part of earnings season, and we saw many of the top companies release their results. And we had both good and bad earnings reports overall in the market last week, which did cause a lot of volatile moves. So what we are generally seeing is that companies who report bad earnings reports are getting punished quite severely, and those who are meeting expectations and are growing are getting rewarded, but probably less handsomely than those that are getting punished by bad results. So last week we saw the earnings report by Meta, which is obviously formerly known as Facebook. They were very poor results around the board, and there was a lot of high expectations from analysts that they would perform really well in the last quarter. However, this was not the case, and they missed on most major metrics. And this caused the Meta to go down about 25% in one day, which is a big fall. It's a company that I'm not particularly bullish on. I think that they are trying to jump on the metaverse bandwagon. But to be honest with you, I think that they have run out of ideas, and I think that Facebook itself as a main website is not as widely used as it used to be. Instagram is a little bit better, and obviously WhatsApp as well, but I don't hold a lot of hopes for big growth in Meta, and that's why we don't own it. On the flip side, we saw really good results from Amazon, which we have in our portfolio as one of our major holdings. And they reported really good earnings overall, and we saw a lot of growth over different divisions. They also announced that they plan to increase the membership subscription fees for Amazon Prime, which should really add to both the top and the bottom line in forthcoming quarters. So really good result, and we actually saw that go up by about 15% after earnings. So that was a really positive tailwind for our portfolio. We also saw energy stocks again rise last week, and oil is now standing at over $90 per barrel. And this has been very good for our oil stocks. So we have Chevron in our portfolio, as well as Canadian Natural Resources, which has performed really well. I'm still expecting further outperformance of oil. I think that the conditions are very conducive to a higher oil price. And again, we have seen big oil companies agree to just a small production increase, and more demand is coming online after the recovery of COVID. So I expect them to do really well in the future, and wouldn't be surprised if oil reached over $100 over the next couple of months. We also saw some really positive data come out of the US, which said that the jobs in the US had increased by 467,000, and that overall is an increase of 0.7% for the month, which is the highest increase for the last 10 months. And this is really good because this shows a very vibrant economy. And actually, it was 3 times over the estimates, consensus estimates. And it just shows that there is a lot more jobs in the overall economy, and things are starting to recover, even though there was a high case of Omicron over the last couple of months. So expect that to go from strength to strength. As we move on to Europe now, and generally the major indices in Europe were down last week, except for the UK, which made a very moderate gain. And the majority of this is to do with Christine Lagarde, who's the president of the European Central Bank, who said in a speech last week, and she just failed to reiterate the fact that the ECB didn't plan to increase rates, which she had said in previous announcements that she had made in the past. And this led to a lot of people believing that over the next few months they could announce increased interest rates, even though they hadn't said that previously before. And she said that they weren't going to make any concrete decisions at the moment, and they needed to analyze the data. So this put a little bit of fears into the market that those interest rates could increase. Another reason why the European indices were down is there was some data released from the Eurozone that said inflation had increased to 5.1%. And this is probably another reason why they're looking to see what happens in terms of inflation before they decide whether to increase those interest rates or not. But that is historically a very high figure for inflation in Europe. It was also announced by the Bank of England that they were going to raise interest rates again, and they decided to increase it by a further 0.25%, increasing that up to 0.5% in terms of the interest rate. So it's clear that the UK is taking a faster approach in terms of increasing those interest rates to try and curb inflation. Full data was also released from the Eurozone, which said that the GDP had actually increased by 5.2% for the full calendar year in 2021. And this is up, obviously, from a massive slump that happened in 2020, where the economy went down over 6.2% in terms of GDP. But obviously, that was on the back of a very harsh year in terms of COVID in 2020, but it's showing positive signs that the GDP in the Eurozone is increasing slowly. As we move on to China now, and I'm not going to spend a huge amount of time talking about China, and that is mainly because the stock market in China and Hong Kong last week were closed due to the Lunar New Year. However, there was some really interesting data that was released from China, which said that the PMI, which stands for the Purchasing Managers Index, was at about 50.2%. And that was actually down from the previous month in December, which was at about 50.4%. And again, the majority of that was to do with restrictions in terms of COVID and a slump overall in the service sector. However, the manufacturing figures were still quite strong. There was also some really interesting data about the troubled property sector in China. And it was actually revealed that out of the top 100 companies in the property sector in China, it shows that sales on average had decreased by 39.6% from the year previously. And if we compare that to the figures that were released in December, that was at about 35.2% on a yearly basis. So it's showing that those sales are continually decreasing in terms of the property sector. And we all know the troubles that have been in the property sector over the last few months in China, and many of those property companies are in debt and have had to slow down their projects. However, although China is trying to do its best to make sure this isn't a systemic risk to the overall economy of China, I also think that they're taking this as a potential opportunity, because they had been complaining over the last year or two that the property sector in China had been fueled and it was in a bubble, and the prices were continually going up in terms of the price of properties, and people were speculating and buying properties to either rent out or to sell on at a profit. And this stopped them, people being able to live in China and them building affordable housing, etc., for the majority of their people. So I think they're using this as an opportunity. However, they need to make sure that that doesn't spill out into other areas of the Chinese economy. Last week also marked the start of the Winter Olympics, and the president, Deng Xiaoping, opened the ceremony. However, there has been a few issues at the start of the Winter Olympics. As we know, the crowds have been very low and they've had to do social distancing. They also have snacks which are delivered by robots to people's seats, and there's a lot of hand sanitizer and other things. So they are really trying to stop the spread of COVID going around the country. And we have also seen a lot of issues in terms of the athletes actually arriving in Beijing and testing positive for COVID and then being sent back as well, which has disrupted not only competition but also disrupted the training regimes. And it's actually said that the cases of foreign people coming into the country in terms of the Winter Olympics and having COVID is actually higher than the daily cases over the whole of China. So it's something that they need to watch out for to make sure that cases do not increase in China, as they had been very strict before that point on letting foreigners into the country. As we move on to the top 3 performing stocks of last week, and in number 1 was Magnite, which is an advertising company, and that was up by about 11.9% last week. And again, we are starting to see those small cap stocks which had been punished over the last few weeks begin to bounce back. The second best performing stock in our portfolio last week was Nel Hydrogen, which is a Norwegian company, and that was up about 10.5% for last week. The third best performing stock in our portfolio was Everbridge, and that was up by 10.1% last week. As we move on to crypto now, and last week was a much better week overall for both Bitcoin and the cryptocurrency market. And we actually saw Bitcoin rise by about 12.8% last week. And it managed to take back that very important $40,000 mark. And we are now sitting just shy of 43,000 at the time of this video. I've been saying over the last couple of weeks that I'm starting to see really good on-chain metrics for Bitcoin. We're seeing very high levels of hash rate. We've seen whales step into the market, and those are increasing, which shows that a lot of the speculators from before had passed over their Bitcoin, sold their Bitcoin to some of the larger whales who have much stronger hands, and they have been accumulating very heavily. And we're also getting very close now, or probably just breached it, but we need to breach it for probably another 24 hours or so, that minimum short-term holders price, which is at about 43,000 at the moment. And if we push up beyond that, that shows that the majority of market participants will be in profit in terms of short-term traders, and then we're much more likely to see some momentum come to the upside. So some very positive on-chain metrics that we are seeing. We also saw last week, we saw 2 Bitcoin spot ETFs which were delayed, and the applications were due for last week, but the SEC have asked for further comments from the public, which is a very normal tactic for them in order to be able to delay. So no result in terms of those applications, but we're expecting those applications to be either approved or rejected over the next couple of months. There was also a very important conference last week, which was hosted by Michael Saylor at MicroStrategies, where he invited many of the mainstream companies from around the world to discuss about having Bitcoin either in their treasury or following a Bitcoin standard. And Jack Dorsey, the CEO of Block, was the main keynote speaker. And he said some very interesting things. So he said that using Bitcoin in your organization leads to a lot more transparency. And he said it also leads to a lot of long-term thinking rather than the short-term decisions that you get stuck into when you're a CEO of a very large organization. Allows you to be able to think much more long-term. So I think these types of conferences are really good because it's much more likely in the future that many of these large organizations are going to start to put Bitcoin on their balance sheet, or at least have a Bitcoin strategy moving forward. We also saw a big jump last week for the 𝗳𝗃𝗃𝗃 token, and that is because they announced a reward restructuring of the player versus player competition, and this should drive a lot more people to the 𝗳𝗃𝗃𝗃 token. And that has been very good for the price last week. However, I do not have 𝗳𝗃𝗃𝗃 in our portfolio, but it is something that I may add in the future if the right price point occurs. Overall, it was a good week for cryptocurrency, and I'm going to continue to do a lot of my short-term trades that I generally do during times of volatility in crypto. But it's important to notice that I don't chase trends. I tend to buy on weakness and then start to sell on strength. So don't be surprised if I'm not jumping on the bandwagon and increasing my positions as the price goes up. I tend to do the opposite. And this is generally the best strategy with cryptocurrency, because you want to get in when the prices are very low and you want to sell off when the prices start to improve. However, that is just for the short-term strategy. However, I do plan to hold my core positions for much longer and just trim when they get to all-time highs or much higher price points. Thanks very much for listening to my video today. I really appreciate all the patience that you've shown over the last couple of months. Understand that January and the beginning of February was very difficult. However, we are starting to turn a corner now in both crypto and stocks, and I hope that it's going to be a really great rest of 2022. Also, don't forget to join my Discord group if you haven't already. We have a great community full of buzzing bees, which we often talk about what's happening in the stock market, and people are able to ask me questions on a day-to-day basis. It's a very active community, so feel free to check out the invitation underneath this video. Until then, have a great week ahead.